Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Nigel Thomas, manager of the AXA Framlington UK Select Ops Fund. Hi Nigel.
Morning, Emma.
So on the face of it, it doesn't look like there's much going on in the UK stock market if you just look at headlines. The headlines are sort of very involved with China and Greece.
Yeah.
But the UK, of course, is not just a domestic market, it is a global market. And those things that happen outside the UK can affect the UK stock market, can't they?
That's right. We're seeing very good dividend growth in the UK, which you don't see in the headlines, but very strong dividend growth, especially from the FTSE 250 companies. I think we're expecting dividend growth of 8% this year from the total UK equity market. But there's a lot going on in China, that's slowing down in China. I was visiting in Shanghai in January, and I went to a conference and visited about 11 UK subsidiaries of UK listed companies like Michael Page, Saatchi's, Rotork, and companies were seeing a slowdown. Spirax-Sarco had actually seen overcapacity, not only in the property and construction market, a lot of empty apartment blocks, but also in the food and drink industry there was overcapacity. So the slowdown there is affecting some UK companies, and obviously commodity prices are quite soft as well.
And of course, our biggest market in the UK is Europe, and there's been an awful lot going on in Europe as well. But that seems to have turned the corner and looking positive, because Greece is such a small part of that European market. So presumably growth in Europe positive for UK. Yeah,
I think we were starting to see growth shoots in Europe. Where we've had the supply side reforms in Portugal, Italy, Spain, you're now seeing some signs of growth. Even the Italians are going to denationalise part of their postal service. So there are signs that the supply side reforms are going to work and come through into the GDP growth numbers.
And you mentioned there at the beginning that we've seen this dividend growth in the FTSE 250 space. Yeah. Over the last 5, 10 and 15 years, the FTSE 250 has outperformed FTSE 100 and FTSE small caps, excluding investment trusts. Yeah. Is this something we can expect to continue? Well,
I believe we've got some super companies capitalised around the £1 billion mark, and I add value in my fund through investing heavily into the FTSE 250. And a lot of the companies I've got in the FTSE 100 were in the FTSE 250. So companies like ITV, Travis Perkins and James's Place, they were all in the FTSE 250 and now FTSE 100 companies.
So would you say then China is perhaps the only cloud in an otherwise sunny sky?
Well, we're waiting for the Federal Reserve to maybe move rates higher. That could happen in the autumn, and then the Governor of the Bank of England has also indicated rates might go a bit higher in the UK around Christmas time or the New Year. And we're certainly 10-year bond yields are yielding 2.1% in the UK, so that's indicating that rates will start to normalise over the next few years.
So that's a good thing or a bad thing?
Well, normally a bad thing for equity markets, rising interest rates. But if it's very small steps, going from 0.5% to 2% over the course of 2 or 3 years, then I think that will be absorbed by equity markets.
And it's not exactly a shock, is it? We're getting lots of warnings.
We are getting lots of warnings. I think the US, if the US Fed is looking at evidence-based numbers of their economy, if the numbers don't come through and are very strong, then their rates hikes could be delayed as well.
Nigel, thank you very much.
Pleasure.
This is Emma Wall for Morningstar. Thank you for watching.